Question 1. Which of the following is not required to obtain an insurance license in New Jersey? A. Completion of the application process. B. Proof of financial solvency. C. Passing the examination requirements. D. Submission of fingerprints for a background check. Answer B. Proof of financial solvency. Explanation. According to the New Jersey Insurance Regulatory Exam Guidelines, an applicant must complete the licensing application process, pass the required examination, and submit fingerprints for a background check. However, proof of financial solvency is not a prerequisite for obtaining an insurance license. Financial solvency may be a requirement for insurance companies, but not for agents or brokers seeking licensure. Question 2. Mr. Smith, a licensed insurance agent, has been offering discounts to his clients in exchange for referrals. What is the most likely legal consequence for Mr. Smith's actions under New Jersey law? A. His license will be revoked due to fraudulent inducement. B. His actions are legal as long as the discounts are not excessive. C. He will be fined but not lose his license. D. His actions could be considered a violation of anti-rebating laws and lead to penalties. Answer D. His actions could be considered a violation of anti-rebating laws and lead to penalties. Explanation. New Jersey law prohibits agents and brokers from offering any form of inducement or rebate as part of an insurance transaction. NJSA 17-20-10. Offering discounts in exchange for referrals violates anti-rebating laws and could result in disciplinary actions, including fines, suspension, or revocation of an agent's license. This is a clear violation of fair marketing practices designed to protect consumers from unfair competitive advantages. Question 3. Which of the following is the duty of an insurance producer when acting on behalf of a client? A. To only sell the highest premium policies. B. To act in the best interest of the client and provide unbiased advice. C. To avoid informing clients about cheaper alternatives. D. To represent the insurer's interests over those of the client. Answer B. To act in the best interest of the client and provide unbiased advice. Explanation. An insurance producer has a fiduciary duty to act in the best interest of the client. This includes providing unbiased advice, disclosing all relevant policy options, and ensuring the customer is informed and protected. Misleading clients or failing to inform them about cheaper or more suitable options violates ethical standards and may lead to discipline actions as outlined in the Consumer Protection and Ethics section of the New Jersey Insurance Regulatory Exam Syllabus. Question 4. Which of the following is an example of unfair claims settlement practices in New Jersey? A. Settling claims promptly within the required time frame. B. Denying claims without proper investigation or evidence. C. Offering the highest settlement amount available. D. Keeping clients updated about the status of their claim. Answer B. Denying claims without proper investigation or evidence. Explanation. Under New Jersey's fair claims settlement practices, insurance companies are required to thoroughly investigate and handle claims in a fair manner. Denying claims without conducting proper investigations or obtaining necessary evidence is considered an unfair claims settlement practice. Such actions violate the law and may lead to penalties or disciplinary action. New Jersey's prompt payments laws require insurers to resolve claims within a reasonable time frame after the necessary information has been received. Question 5. Which of the following insurance licenses does not require an examination in New Jersey? A. Property insurance license. B. Casualty insurance license. C. Limited lines insurance license. D. Life insurance license. Answer C. Limited lines insurance license. Explanation. In New Jersey, the limited lines insurance license allows agents to sell specific types of insurance without requiring the completion of the standard licensing examination. This type of license is often issued for specialized areas such as travel, rental car, or credit insurance. Other licenses, such as property, casualty, and life insurance, require passing the examination as part of the licensure process. Question 6. Mr. Adams, an insurance agent, receives a complaint from a client stating that the agent misrepresented policy details during the sales process. What should Mr. Adams do in this situation? A. Ignore the complaint if he believes the policy details were correct. B. Report the complaint to the New Jersey Department of Banking and Insurance, DOBI. C. Offer the client a refund to resolve the issue. D. Immediately cancel the policy to avoid further complications. Answer B. Report the complaint to the New Jersey Department of Banking and Insurance, Doe-by explanation. New Jersey requires insurance agents to act ethically and report any complaints or issues promptly to the Department of Banking and Insurance. Doe-by if they involve misrepresentation, fraud, or unethical conduct. In this case, the agent should not ignore the complaint but should notify Doe-by about the situation misrepresented, considered a violation of the law and may result in disciplinary action or penalties. Question 7. Which of the following is not a responsibility of an insurance broker under New Jersey law? A. Acting as a fiduciary and ensuring that client funds are handled appropriately. B. Marketing products exclusively from a single insurer. C. Disclosing all relevant policy options to the client. D. Ensuring that the client receives the best possible coverage for their needs. Answer B. Marketing products exclusively from a single insurer. Explanation. Insurance brokers are required to represent multiple insurers and provide clients with a broad range of options, ensuring that they are not limited to a single insurer's products. This is in contrast to an agent who typically represents a specific insurer. Brokers must act in the best interests of the client, providing full disclosure and recommending the most suitable policy options. They also have fiduciary responsibilities for handling client funds appropriately. Question 8. Under New Jersey's insurance regulations, which of the following is considered an unfair trade practice? A. Providing clear and accurate information to consumers. B. Offering a rebate or inducement to clients to influence their decision. C. Offering policies with coverage limits clearly disclosed. D. Providing customers with a list of all available policy endorsements. Answer B. Offering a rebate or inducement to clients to influence their decision. Explanation. New Jersey prohibits offering rebates, inducements, or other financial incentives in exchange for insurance purchases as outlined in the state's anti-rebating laws. This practice is considered an unfair trade practice and can result in significant penalties for insurance agents or brokers. The goal is to ensure that consumers make informed decisions without being influenced by unethical or deceptive tactics. Question 9. What must an insurer do if it decides to cancel an insurance policy in New Jersey? A. Provide a 45-day notice to the policyholder before cancellation. B. Provide a 10-day notice to the policyholder before cancellation. C. Provide a 30-day notice to the policyholder before cancellation. D. Provide a 60-day notice to the policyholder before cancellation. Answer C. Provide a 30-day notice to the policyholder before cancellation. Explanation. In New Jersey, an insurer must provide a minimum of 30 days notice before cancelling an insurance policy as stated in the New Jersey Administrative Code and JC 11(1). This applies to most types of policies and ensures that the insured has sufficient time to seek alternative coverage before the policy is terminated. Question 10. Which of the following is a key component of a life insurance contract? A. The policyholder's insurable interest. B. The policyholder's ability to pay premiums on time. C. The policyholder's employment history. D. The policyholder's health history prior to the contract. Answer A. The policyholder's insurable interest. Explanation. Insurable interest is a fundamental requirement in life insurance contracts. The policyholder must have legitimate financial or emotional stake in the life of the insured person, ensuring that the contract is not used for speculative purposes. While factors like health and ability to pay premiums influence underwriting decisions, the key component is the existence of insurable interest as by law to prevent moral hazard and unethical practices in life insurance policies. Question 11. Which of the following is a duty of an insurance producer under New Jersey law? A. Guaranteeing the lowest premiums available. B. Advising clients about the need for insurance coverage. C. Acting as a fiduciary only in cases of policy cancellation. D. Settling claims on behalf of the insurer. Answer B. Advising clients about the need for insurance coverage. Explanation. Under New Jersey law, an insurance producer, agent, or broker has the duty to advise clients on the necessity of appropriate insurance coverage based on their needs and circumstances. The producer must also provide guidance on policy options and the implications of coverage limits, exclusions, and endorsements. The role does not include guaranteeing the lowest premium or settling claims, as these are outside the producer's responsibilities. Question 12. Which of the following is true regarding New Jersey's prompt payment laws for insurers? A. Insurers must pay claims within 90 days of receiving all necessary documentation. B. Insurers must make decision regarding claims within 15 days of receipt of the claim. C. Insurers must settle claims within 30 days after the insured provides all required documentation. D. Insurers must pay claims within 60 days from the date of policy inception. Answer: C. Insurers must settle claims within 30 days after the insured provides all required documentation. Explanation: under New Jersey's prompt payment laws, insurers must settle claims within 30 days after receiving all necessary documentation from the insured. Failure to comply can result in penalties or interest payments to the policyholder. This regulation is designed to ensure that insurance claims are processed efficiently and policyholders are not unduly delayed in receiving their due benefits. Question 13. Which of the following would be considered a violation of the New Jersey insurance fraud regulations? A. Misrepresenting a policy's benefits to encourage sale. B. Providing accurate and full policy details to the insured. C. Offering discounts for safe driving in automobile insurance policies. D. Offering clear written explanation of policy's exclusions. Answer A. Misrepresenting a policy's benefits to encourage sale. Explanation: misrepresentation is considered fraud under New Jersey's insurance fraud regulations. It is illegal for an insurance producer or insurer to knowingly misrepresent or exaggerate the benefits of an insurance policy to induce the purchase of coverage. Such fraudulent actions can result in penalties, fines, and possible license revocation. Question 14. Which of the following is an example of a condition in an insurance contract? A. The insured must pay premiums regularly. B. The insurer must issue payment for valid claims. C. The insured must file a police report for theft claims. D. The insurer must notify the insured about policy changes. Answer: C. The insured must file a police report for theft claims. Explanation: conditions are clauses in an insurance contract that specify the requirements or obligations of the parties involved. For theft claims, an insurer may require that the insured files a police report as part of the claim process. Failure to comply with this condition can result in a denial of the claim. Conditions differ from duties, which are general obligations of the involved, such as paying premiums or issuing payments for claims. Question 15. What is the primary role of the New Jersey Department of Banking and Insurance, DOBA, to issue insurance policies to consumers? B. To regulate insurance agents, brokers, and insurers. C. To act as an intermediary between consumers and insurance companies. D. To settle claims and provide benefits to policyholders. Answer: B. To regulate insurance agents, brokers, and insurers. Explanation: the primary role of the New Jersey Department of Banking and Insurance, DOBA, is to regulate and supervise the insurance industry within the state. This includes overseeing the operations of insurers, licensing and regulating insurance agents and brokers, ensuring compliance with state laws, and enforcing regulations to protect consumers. Question 16. Which of the following is true about surplus lines insurance in New Jersey? A. Surplus lines insurance requires approval from the Department of Banking and Insurance, DOBA, for each policy. B. Surplus lines insurers must be licensed in New Jersey. C. Surplus lines insurance is used when coverage is unavailable in the standard market. D. Surplus lines insurance is subject to New Jersey's rate-making regulations. Answer: C. Surplus lines insurance is used when coverage is unavailable in the standard market. Explanation: surplus lines insurance is a type of coverage offered by insurers not licensed in New Jersey but authorized to sell policies in the state through surplus lines brokers. It is typically used when coverage is unavailable through standard markets. While surplus lines are not subject to the same rate regulations as standard insurers, brokers must compliance with New Jersey's surplus lines laws. Question 17. Which of the following is not an example of a prohibited practice under New Jersey's anti-rebating laws? A. Offering discount on insurance premiums. B. Offering free gift to consumer as an incentive to buy policy. C. Providing low premium to specific group based on risk factors. D. Offering rebate in exchange for the purchase of insurance. Answer: C. Providing a lower premium to a specific group based on risk factors. Explanation: New Jersey's anti-rebating laws prohibit offering incentives such as discounts, gifts, or rebates to influence a consumer's decision to purchase insurance. However, providing lower premium based on legitimate risk factors such as safe driving record or claims history is not prohibited, as it is based on the actual risk assessment of the insured. Question 18. What must an insurance company do before increasing rates in New Jersey? A. Notify policyholders of the increase 10 days before the new rates take effect. B. File the rate increase with the New Jersey Department of Banking and Insurance. Do-by for approval. C. Obtain written consent from all affected policyholders. D. Set rates according to their internal financial needs without regulatory oversight. Answer. B. File the rate increase with the New Jersey Department of Banking and Insurance. Do-by for approval. Explanation. In New Jersey, insurers must file rate increases with the Department of Banking and Insurance. Do-by for approval before they can take effect. The department reviews the filing to ensure that the rate increase is justified and complies with state regulations. Insurance companies cannot unilaterally increase rates without approval. Question 19. Under New Jersey law, what is a primary responsibility of an insurance adjuster? A. Settling claims without consulting the policyholder. B. Investigating claims and determining liability. C. Making decisions about policy exclusions. D. Collecting premiums from policyholders. Answer. B. Investigating claims and determining liability. Explanation. An insurance adjuster is responsible for investigating claims, determining the cause of loss, assessing the amount of damage or loss, and determining liability. They play a crucial role in the claim settlement process but do not have the authority to unilaterally settle claims without the involvement of the insurer and the policyholder. Adjusters also do not handle premium collection. Question 20. Mr. Harris, a broker in New Jersey, is seeking to work with an insurer that is not licensed in the state. Which of the following should he do to legally place business with the insurer? A. Place business with the unlicensed insurer without any special requirements. B. Submit a request to the Department of Banking and Insurance. Do-by for special approval. C. Work with a surplus lines broker to place the business. D. Only place the business if the insurer is admitted in another state. Answer. C. Work with a surplus lines broker to place the business. Explanation. In New Jersey, brokers can legally place business with an insurer that is not licensed in the state by using a surplus lines broker. Surplus lines brokers are authorized to place coverage with non-admitted insurers when coverage cannot be obtained from licensed insurers. The business must meet specific requirements, including being placed through a surplus lines broker, complying with state regulations. Question 21. In New Jersey, what must an insurance company do if it denies a claim based on a policy exclusion? A. Provide a written explanation of the denial to the policyholder. B. Refund any premiums paid for the denied claim. C. Immediately notify the Department of Banking and Insurance. Do-by. D. Pay the claim within 30 days of the denial. Answer A. Provide a written explanation of the denial to the policyholder. Explanation. Under New Jersey law, when an insurer denies a claim based on a policy exclusion, it is required to provide a written explanation to the policyholder outlining the reasons for the denial. This ensures transparency and allows the policyholder to understand the specific terms or exclusions that apply to their claim. Question 22. Which of the following types of insurance policies are subject to New Jersey's standard policy forms and provisions? A. Health insurance policies only. B. Homeowners insurance policies only. C. Commercial insurance policies. D. Personal automobile insurance policies. Answer. D. Personal automobile insurance policies. Explanation. In New Jersey, personal automobile insurance policies are subject to standard policy forms and provisions which are regulated by the Department of Banking and Insurance. Do-by. This ensures uniformity and consumer protection in the personal automobile insurance market, although other types of insurance, such as health and homeowners, may also have specific requirements but necessarily the same standardized provisions. Question 23. Which of the following is true about the New Jersey Life and Health Insurance Guarantee Association? A. It covers all insurance claims regardless of policy type. B. It protects policyholders in case their insurer becomes insolvent. C. It only covers claims under commercial insurance policies. D. It guarantees full reimbursement for all claims. Answer. B. It protects policyholders in case their insurer becomes insolvent. Explanation. The New Jersey Life and Health Insurance Guarantee Association provides protection for policyholders if their insurer becomes insolvent. It ensures that consumers can still access the benefits of their policies even in the event of an insurer's financial failure, but there are limits to the amount of coverage provided under this guarantee. Question 24. What must an insurance agent in New Jersey do to maintain their license? A. Pass a state exam every 2 years. B. Complete continuing education courses as required by the state. C. Pay an annual fee without additional requirements. D. Undergo a background check every 5 years. Answer: B. Complete continuing education courses as required by the state. Explanation: insurance agents in New Jersey are required to complete continuing education courses to maintain their license. The state sets specific requirements for the number of hours and the topics to be covered, ensuring that agents stay current with changes in insurance laws, policies, and regulations. Question 25. Which of the following is a characteristic of a New Jersey basic auto insurance policy? A. It provides full coverage for all types of accidents. B. It includes liability, medical expenses, and uninsured motorist coverage. C. It is only available to drivers with clean driving record. D. It requires the insured to pay higher deductible for uninsured motorist coverage. Answer: B. It includes liability, medical expenses, and uninsured motorist coverage. Explanation: a New Jersey basic auto insurance policy provides essential coverage including liability, medical expenses, and uninsured motorist coverage. This policy is designed to provide minimum level of protection for drivers in the state, ensuring they meet the state's mandatory insurance requirements. Question 26. What is the primary purpose of the New Jersey Fair Conduct in Insurance Transactions Regulations? A. To regulate the pricing of insurance policies. B. To establish ethical standards for insurers, agents, and brokers. C. To provide guidelines for the underwriting process. D. To set policies for insurance company mergers and acquisitions. Answer: B. To establish ethical standards for insurers, agents, and brokers. Explanation: the primary purpose of the New Jersey Fair Conduct in Insurance Transactions Regulations is to establish ethical standards for all parties involved in insurance transactions, including insurers, agents, and brokers. These standards are designed to ensure fair treatment of consumers, prevent fraud, and promote transparency in the insurance industry. Question 27. Which of the following statements is true regarding insurance fraud in New Jersey? A. Insurance fraud is only applicable to property insurance claims. B. A person can be convicted of insurance fraud even if they did not intend to deceive. C. Insurance fraud includes both filing false claims and misrepresenting facts to obtain coverage. D. Only insurance company employees can be charged with insurance fraud. Answer: C. Insurance fraud includes both filing false claims and misrepresenting facts to obtain coverage. Explanation: in New Jersey, insurance fraud includes both the act of filing false or inflated claims and the act of misrepresenting facts to obtain coverage or benefits that would not otherwise be provided. This applies to all types of insurance, not just property insurance, and can involve individuals or insurance company employees. Question 28. What is the maximum penalty for a New Jersey insurance producer who is found guilty of fraud? A. Suspension of their license for 90 days. B. A fine up to $10,000. C. Permanent revocation of their license. D. A fine up to $5,000 and possible imprisonment. Answer: D. A fine up to $5,000 and possible imprisonment. Explanation: if an insurance producer is found guilty of fraud in New Jersey, they may face penalties including a fine of up to $5,000 and the possibility of imprisonment. In some cases, the producer's license may also be revoked, depending on the severity of the offense. Question 29. Which of the following is not a condition that could trigger a claim under New Jersey's workers' compensation insurance law? A. An employee is injured while traveling to and from work. B. An employee suffers an injury while performing job-related tasks. C. An employee is injured due to an unsafe working condition that the employer failed to address. D. An employee is injured while operating equipment provided by the employer. Answer: A. An employee is injured while traveling to and from work. Explanation: in New Jersey, workers' compensation insurance covers injuries that occur while an employee is performing job-related tasks, including operating employer-provided equipment and while at the workplace. Injuries sustained while traveling to and from work that commute are typically not covered under workers' compensation unless the employee is engaged in a work-related activity at the time of the injury. Question 30. Which of the following actions would violate New Jersey's insurance solicitation laws? A. A licensed insurance agent offers to review a potential client's insurance needs. B. broker provides quotes for policies from multiple insurers without charging fee. C. An unlicensed individual offers to sell insurance policies to group of people. D. An agent offers educational seminars about insurance options. Answer C. An unlicensed individual offers to sell insurance policies to a group of people. Explanation. Under New Jersey's insurance solicitation laws, only licensed individuals are permitted to sell insurance policies. An unlicensed individual who attempts to sell or solicit insurance policies is in violation of these laws and could face penalties or criminal charges.